And we root for stocks to go down, but we want stocks to go down because we know in the long run, this is what the market's gonna do. All right, guys, we're gonna do a reaction video here today. I've not seen this video yet. It's a YouTube short sent to us from our producer and CEO. Don't listen to Analysts if you wanna make money by Warren Buffett. So let's listen to it.
On any given day, 2 million shares of Coca-Cola may trade. That's a lot of people selling, a lot of people buying it. If you talk to one person, you'd hear one thing and talk to another. You really should not make decisions in securities based on what other people think. If you're doing that, you should think about doing something else, because a public opinion poll will not get you rich in Wall Street. So you really want to stick with businesses that you feel you can somehow evaluate yourself. Charlie and I, we don't read anything about what the economy is going to do, or the market's going to do, or what anytime I see some article that says, these analysts say this or that about some business, it doesn't mean anything to us. You cannot get rich with a weather vane.
So guys, this is 100% spot on. We talk about it on our channel all the time. And remember one thing, analysts are just like the average person. They have career risk. They have to be quote unquote right. Well, how are you right as an analyst? Being as close to consensus as possible. Because guess what? If you're like everybody else, if you say the exact same thing as everybody else and everybody's wrong, hey, everybody else saw it. I don't know. That's what it said. Are you really going to be paid well or better because you go different from the economy? Yeah, or different from consensus?
It's kind of why when you see their estimates, they're all within 1, 2, 3 cents of each other.
All the time. And they're adjusting as time goes on.
Right.
We have analyst estimates on our site just to show people, because people want to see it, but we encourage people to understand a business, see if you can project out what the business will do over a long period of time, and buy it if the price is lower than those values give you.
It is funny to see, like, even just looking, this is Coca-Cola, for example, looking into 2025, you started out with 6 analysts that were talking about 2023, the end of the year, and it dropped down to 6.
And by the way, look at the last year. Analysts are between 47 billion and 57 billion in revenue. Mm-hmm. Now, guys, we feel really good as a herd mentality. We love to be considered part of something. But remember one thing, in investing, it's unfortunately the one area in the world where you will do worse if you do what everybody else does. You'll do better if you think independently. That's the key. Whenever I see people hating on a stock that has a growing revenue and growing profit, I just scratch my head. I go, wow, really? Because the stock price is what drives the news.
Right.
The stock is down a lot, the news will say, why is the stock down a lot? And if you don't believe me, go any day on the specific market.
That's all you have to do.
If the market is up or down that day, the news being reported will justify that. Guys, there are tens of thousands of data points on the economy and every individual company. So you can easily, if the market's up, you can sit there and pull, here's why the market's up. If the market's down, here's why the market's down. But guys, if yesterday the market was down, and here's the reason, those same reasons still exist today. But the market could go up today and they'll have totally different reasons as to why the market is up today.
There are literally headlines that you'll look at in the middle of the day. Do it today. Go to CNBC, go to Yahoo Finance, and it's going to say, here's why the market is, insert up or down today.
Yeah.
That's the story.
The Everything Money community has already helped thousands of people exactly like you to help them understand financials, understand investing, and understand the emotional side of everything to make better decisions for your future and your money. What you get with the software is my 8-pillar process, our stock analyzer tool, which was used over 1.3 million times in 2022, and all the other stock screeners that the Everything Money community of intelligent investors use to find their value plays. These are the exact tools that Mo and I use every single day to find the investments that make the most sense to us. And you also get access to Mo and I and all the thousands of other Everything Money investors, so you don't have to do this alone, because that is the hardest part about investing, is being on your own. Make the choice I made. Invest in yourself for a little over $1 a day to make these decisions easier and smarter as time goes on. Here's the catch. We're not going to give you fish. I'm here to teach you how to fish. If you're looking for a magic bullet, we're not the site for you. We're not the channel for you. If you're looking to become a smarter investor who can find their own process, welcome home. Get started now, risk-free for 30 days at everythingmoney.com. So your job as an investor is to stay independent, have confidence in saying, hey, When I look at a specific company, let's look at Microsoft, for example. Look at Microsoft over here. Look at this chart of Microsoft. I want to remind everybody, and this is the example I always give. At this point right here, I was literally told by a tech CEO, Microsoft is dead. Paul, you don't get it. He literally said to me, he wouldn't take Microsoft if there was $100 billion in cash in the account, and he only had to pay $50 billion for it. He got the business, no debt, and $100 billion in cash. He goes, no, I wouldn't buy it.
That makes zero sense.
Makes zero
buy
sense.
that all day.
Like literally, I was like, no, you don't understand. He goes, no, I understand. I said, no, you don't. He's like, no, I get the company. It's cash flow, no debt, and $100 billion in cash. I'm like, oh my God, he does understand. He's just fucking stupid.
That's like the best offer of all time.
Of all time.
You just gave me the lottery. You just gave me the winning ticket.
Of all time. We look at, and guess what? That's the one, and the reason I always bring that example up, it was the first time I remember thinking to myself, holy cow, I thought this person was smart. They're absolutely dumb. He might be good as a CEO, but the problem is a good CEO should understand investing. If he doesn't understand that concept, that's what's sad. This was an Ivy League educated person. That's how, and I always bring this example up because it was my first shocking, holy cow, people just don't get it.
Yeah.
And I get it out there. It is hard to go against the grain. Whenever a stock I buy goes down, I go, okay, am I just wrong here or am I, you have to ask that question. Look at the market's going up today. I was telling Mo, God, I really want to short, blah, 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 blah. He goes, I know. And Mo wanted to short, blah, 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 et cetera. And there's that fear in me of going like, well, what if I'm just wrong on this one? What if we do have a temper? If it were just me, I probably would do it. But I have my brother to consider and things like that. And I don't want him crying uncontrollably as we do these things. So when Warren Buffett talks about this, it's very difficult to think independently, but it's absolutely critical to think independent when you're analyzing companies. Because if you look at companies like this entire time from here to here, revenue was going like this, profit was going like this.
Cash flow.
I remember saying, wait a second, revenue is going up 7% a year, profit's going up 11% a year, and Microsoft at this point was selling for 9 times earnings. What's Microsoft selling for now? 30 times earnings. 3 times more multiple. That's it, guys. It's not complicated. Mo and I talk about this all the time. All the time.
Yeah.
And we root for stocks to go down.
Yeah.
That's how we know we are programmed a little bit different. Whenever I look at my stocks, this morning I was like, oh, great, Baba's down. And oh, now Meta's down. There you go. But we want stocks to go down because we know in the long run, this is what the market's going to do. We believe that when we look at the S&P 500 30 years from now, it's going to look a lot like this.
Yep.
It's going to look a lot like this. So if we can take opportunities to buy when there are drops right here, drops right here, drops right here, we're going to do very, very well. If we buy good businesses with good economics and good balance sheets, we will do very well. If that makes sense to you, subscribe to the channel, share this video with somebody else. Thank you very much for your time.